Looks like about around $1 billion in net cash. So basically 32 billion enterprise value, 33 billion market cap, same thing. No need for a live price. This kind of work, this is not intended to make that, illuminate that sort of part. In fact, it's sort of better not to have a live price. Oh yeah, let me update the screen. Justin Bieber. What's the problem with Justin Bieber? What is he? Why is he so against Justin Bieber? I'm the kind of person that doesn't even bother to try to time the shorts because I don't think I can add value on timing. I can add value on kind of add value just on stock selection. So timing is like subject to a lot of different other factors. Yeah, you don't like their product, Ryan? That's funny. I'm curious why. Is it like a VPN type, like virtualization type software? For like big enterprises to kind of contain their users? Make sure their users don't do anything stupid, fuck up the network, allow intrusion. Okay, so just in a couple of cells, I already... Yeah, I guess the enterprise would rather have, a zero trust solution than... Like, if you're JP Morgan, you get 300,000 people on your network. You don't want a single one of them fucking... You don't trust a single one of them is going to be responsible. Yeah, it's all remote work. Nannyware. Really, the enterprises don't give a fuck. Revenue grew 26%. Just size, Jono. I mean, max position 5%. Max position 5%. They're only going to get liquidated if it goes up 20x. Now, if you're trying to make 10x return, you're going to have to take some bigger risks. You know, there's no free lunch. You want 20% a year, that you should be very happy with. But if you need 200% a year, you know, you got to take bigger risks, which subject you to bigger downsides. Yeah, I like Intel. Justin Bieber! Magellan's a lot cooler. Circumnavigated the globe with one ship. Rocco, you don't even want to... My portfolio for... That's why I kind of don't want to... I'm trying to figure out the best way to like do portfolio and trading for you guys, because the YOLO stuff is fun, But one, it teaches some really bad habits. Two, it's stressful for me. Because now I'm feeling like a professional portfolio manager again. Tossing and turning, staying up late. Ow, my back hurt. What's God I'm gonna do today? You know, that type of lifestyle is. Startups are hard enough. I don't need that too. And then, you know, when you have a YOLO portfolio, you can go up 20x, which I did, but you can also go down a lot, which I also did. And it's just like, you know, and it's more entertaining for you guys, but it kind of makes me look bad, you know, and I'm showing off the wrong stuff. So I don't know. I'm in a mental crossroads as to how to handle that. But if I show you like, okay, here's like a nice diversified portfolio, you know, the results are going to be, I think they'll be great, you know, because I'm a good investor. But they're also going to be like kind of slow and boring. So I don't know, you know. I don't know how to handle this. There's a trade-off somewhere here that I have to make. Yeah. Show you the power of long-term gains. Okay, see you in 10 years. Bye. Deuces. Okay, look at the cash flow. It's kind of incredible. Now I see why it's a $32 billion company. So what's 600 million times 4? 2.4, right? And then you got 300. This cash flow, it's like 50% net margin. 50% free cash flow margin. So what's 300 times 4? 1.2 billion. Oh man, this thing's long. 26 times earnings with huge growth. I love it. Now I'm straight lining some stuff that I have to. That's why I have to look at a few more quarters. But what a fucking company, right? Founded in 2007. Imagine you founded a company today, okay? And in 18 years, just 2043, Sam Bankman's still going to be in jail in 2043. You come out and it's worth $32 billion and you own 30% of it. You're $9 billion. You could buy a sports team and it's not even a big purchase for you. So what would you, how fast do you think you're going to trade yourself to 32 billion? Nobody's traded themselves to 32 billion ever. Maybe Buffett. Without OPM, basically nobody. So you need OPM, other people's money. And even then, there's only one or two guys that are worth 32 billion okay, so AD, let me help you out here. I want to make sure you understand. This is English. I don't know if English is your first language, but YOUR is different from YOURE. Now, to people that speak English and read and write frequently, this difference does not need to be thought about. It comes automatically. It's second nature, right? We also don't need to think about there, and there, because you start to get used to it if you speak and write a lot of English, if you read and write and, you know, you've worked at some point in your life. So this, but the bottom one here means you are, like you're an idiot. You tried to say I was lame. You're lame, but you spelled it with this one. This is your things. This is a possessive. So like your brain is diseased. Possibly from Adderall use. I don't know. But that is your brain. Or your career is not good because you can't spell. You are an idiot. You are going nowhere in life. You are a failure. That's this part. That's over here. So I'm just helping you out there. Okay. Skitty, stop it. Oh, this fucking cat, man. I'm gonna fucking throw you out the window, please. Yeah, you making too much noise, kitty. Going brazy. That's right. She's going a little brazy. Talking about Justin Bieber. Shut the fuck up, kitty. She's going through heat. Even my other cat's been telling her to shut the fuck up and smacking her in the face. Okay, so I don't think they give segments out. Oh, they kind of give a couple.
Waterfilled.
But it's like a big global, really big global sales company. And you know what's funny? Just going back to my point that, there's there aren't a lot of people that started $32 billion software companies either. But if you asked me, what's easier, starting a $32 billion software company or trading my way to $32 billion net worth? Or again, we're saying maybe you keep a quarter of the software company. So that's what, I don't know, 6 billion net worth. Or trading my way to 6 billion net worth by starting a hedge fund or trading yourself. Software company sounds 1,000 times easier. I mean, 100,000 times easier. If you, she's not neutered now. So, that's just, so if you started Zscaler 18 years ago, okay, just 18 years ago. Now, Citadel was started in 1990. So compare that to Zscaler, right? Now, Citadel is worth more than Zscaler at this point, but, Ken Griffin is worth a lot more than $6 billion. But point is, there's one Citadel, and there's a lot of $30 billion software companies. And, exactly. If you look at the richest people in the world, there aren't that many traders. Now, there's some interesting academic literature on this that I think Nassim Taleb, of all people, even though he's an idiot, he stumbled upon this idea of like who makes more money. And there's kind of a risk, if just because you have this like, one distribution that's like this, one distribution that's sort of like this, this distribution is not necessarily, you see more of the entrepreneurs and then you see more of the investors. But, the AUC, I don't know if I even draw this really well, but the returns of the investors can actually be higher. They can actually get more of the money. Maybe there's some shift here, like it's more of a here, and then this is maybe where this is maybe the mean point here. So yeah, I didn't draw this maybe as good as I could. Let me just do it again. Okay, so here's the mean, and then we'll do the investors in green because they have all the money. So yeah, just assume something like this, and then we'll do the entrepreneurs in red because you go crazy being an entrepreneur. So you see more people making billions here, but the actual area under the curve, integral of money, is with the investors. So it's just one way to think about it, at least. So it looks like Bill Gates, who extracts more money out of companies, investors or founders, and a lot of people have looked at this and it's actually the investors. But again, the investors do have to share it with their investees. who are typically, you know, limited partners and things like that. Justin Bieber. Okay, so Zscaler, even though it's a new company, decided to go with the weird fiscal year. Thank you, Zscaler. That was great. I love it. I love it when companies do that. Why use the calendar? Who needs it? Right? Fuck the calendar. I want to make up my own fiscal year. It's so much better. Really makes a big difference. Totally not confusing. The best is Japan. Japan's all on March fiscal year end. So you're doing like, it's fiscal year 2025 in 2024. It's like the stupidest thing, but you get used to it. We should eliminate risk factors from these things. The new Trump SEC. No more risk factors. You know it's risky. You don't need risk factors. What's the point? Tell me what the point is. You might lose all your money. That's all you need to know. We can look at Moderna. But right now, I don't know if you notice, I'm looking at Zscaler. So yeah, crazy revenue growth, 1 billion to 2 billion in just 2 years. And if you said, okay, $1 billion of software revenue, big deal. Well, $1 billion of software revenue is worth like 15 billion. You know, and now that they're approaching 3 billion in software revenue, companies worth 30 billion. Could be worth 50 billion before we know it. It's just such a great business to be in. And software's gotten easier. But again, these guys, it doesn't look like the software they make is that technically interesting. It's just they probably have the best sales and marketing. Selling this crap to every enterprise in existence. Every big company uses, oh yeah, Zscaler. Make sure our idiot employees don't fuck up our valuable information. Okay, Liggy, I think it's time for you to go, buddy. But if you want to subscribe to Godel, you can still chat with me. Because basically, if I made you money, I feel like basically you owe me. Okay? If I lost you money, I don't even know who you are. What? What happened? What? Huh? What? Huh? I don't know what you're talking about. Huh? What? Who says something about that? What? Talib is just full of himself. He's not that fucking smart. Talib like got a basic ass education and then tried to convince the world that like because he paid attention in fucking class that and he read some books that he's a fucking genius. And if you read his stuff, it's like, yeah, dude, I read those books too. You know, it's like that Good Will Hunting scene in real life. He's that guy in Good Will Hunting, not Matt Damon. I was reading it and I was like, oh, this guy's so full of himself, but like, I know all this stuff. And you know, I read a lot. I've worked really hard my whole life to learn things, but you know, I don't walk around and lord it over people. Because I know that there's so much more stuff I don't know. Yeah, his God complex comes from, you know, God knows what. And, you know, learning a lot's great, but if you learn a lot just to tell people they're stupid, that's, you know, I can't support you. And, you know, the self-infatuation is so unattractive. Okay, so 48% growth, 34% growth, incredible growth. What's not to like? Look at the cash flow. 779, up from 462. And again, this is why everyone gets Palantir wrong. Look at the cash flow. Almost tripled while revenue doubled. That's called leverage. Revenue doesn't have to grow that much. Cash flow will go through the roof. The cash flow is like basically doubling again year over year, almost doubling year over year. You don't need a lot of doubles year over year to get to a crazy number. So everyone's like, oh, it's this much times revenue. Well, hold on. Revenue doesn't pay the bills. Earnings pays the bills. And GAAP earnings and free cash flow are two different things. So like, don't, it's not a very Shkreli thing to do. Don't ever say price to sales if you haven't normalized for margins. Look at these guys, right? Look at the cash flow free cash flow margin, right? Look at that. 50% of revenue is net earnings after tax. 50%. How many companies do you know have 50% net margins? Net margins, right? So if you say, if I catch you, okay? If I catch you say, well, Zscaler, well, it gets worse because what people will do, I hope you guys are paying attention. What people will do is they'll do some cardinal sins here. So this was year ending, let me do this right, 7/31/24, 7/31/23, 7/30/22. This was 10/31/24. Okay. Stay with me, pay attention. This is the really valuable shit right here. This is just like a lot of the fallacies, follies, and idiocies that come with growth stocks. A lot of people don't understand growth stocks, and you cannot be a good investor. And Buffett proved this. You cannot be a good investor unless you understand growth. It is critical. Growth is everything in investing. Everything. Because growth compounds the same way investment returns compound. Cash flow compounds. Let's see here. Little tedious, bear with me. This is going to be worth it. Okay, this is April. All right, I'll just do the revenue because that's the point I'm mostly trying to make here. Great. Okay, so I see some of you. I do. I see you. And I got beef because if a lot of people complain about how expensive some of the growth stocks are, like Palantir. But they don't really understand what they're looking at. And I want to help you understand. So here is Zscaler, which is, it's a growth stock. It's not like Palantir. But no, Kami. It's mostly Jason. I just do the business side. I wish I could do the tech side. Shit. I wish. I mean, I do some of it, but I can't compete with my brilliant coworkers, Jason, Vlad, Fat Cat, our newest guy, Param. These guys are really smart. Anyway, okay, so let's say I just look at these last 12 months. That's called TTM, trailing 12 months, right? What's the trailing 12 months? That's 2.3 billion total, okay? What mistake did I just make? What mistake did I just make? Whoa, INQ, what the fuck? What the hell is happening? I love it. I love this shit. You don't really even realize the market's open. So what mistake did I just make, if anybody knows?
Order filled.
Well, I'm just trying to get a number. Yeah, exactly, Pascal. You know, if you're looking at the last 12 months, you're really in a growth company. You're really ignoring the growth the company has. In fact, you should be looking at the next 12 months, or just annualize the current quarter. But you know, there's a couple ways to do it. But looking at the past is really just not the way to do it at all. So. So the trailing is 2.3. So let's look at, so it's a trailing revenue. So a noob might look at this and say, okay, I'm going to use the trailing revenue to somehow divine something meaningful. So someone slightly smarter might look at the run rate. So what's the run rate? That's 628 last quarter times 4. Well, that's a little better. That's 2.5 billion. If you're really smart, you look at future 12 months, basically, or next 12 months, and you'll take the run rate and you'll multiply it by their growth rate, and now you got 3.26 billion. That's still not the right thing to do, because what we really want to look at is free cash flow, because unless we know the margins, price to sales means nothing, right? So now let's look at free cash flow. Well, free cash flow for 2024 was 635. Again, not maybe the smart thing to do. You could try the run rate, which is 314 times 4, but you're still getting not really a great number, because you want to look at the growth of that. This is maybe the real number. So look at how different each of these pictures are. This gives us 14 times sales, which doesn't sound so great. This gives us 13 times sales, and this gives us 10 times sales. But even 10 times sales, it sounds kind of expensive, right? Well, it's not, because now let's look at the actual earnings. Well, if we look at last year's free cash flow, 50 times earnings doesn't sound so great. If we look at the run rate, it's 25 times earnings, which for a 30-40% revenue growth company is great. But if even better, next 12 months cash flow, 17 times earnings for a company growing like crazy. And so you can go from like thinking it sucks to thinking it's super cheap just by changing your frame. You know, adjusting your frame of what the fuck you're looking at.
Order partially filled. Order filled.
Yeah, I mean, debt just goes into enterprise value, which is why we use enterprise value instead of market cap. In this case, they're very similar. So it looks like a great company, even if the product isn't fantastic. But we have to worry about other things like, you know, is this company saturating their opportunity? You can see growth is, you know, I always talk about the second derivative. The second derivative of growth is negative. It went from 40% growth to 35 to 32 to 30 to 26. Are we going to see this growth rate continue to, drop? I mean, EV to EBITDA isn't that crazy. I mean, it's EV to EBITDA could be kind of useful sometimes. It gives you a kind of an equal playing field for everyone. That's why bankers like it so much. I'm not saying you should live and die by EV to EBITDA, but
Order cancelled.
I understand why people like it. Like, it's not insane, to me at least. Yeah, look, at the end of the day, EBITDA does give you information. It's not like it's useless. EV is always, like, market cap is always irrelevant compared to EV. Always. It's just not easy to look up market cap. I'm sorry, EV. You got to sit there and look at the balance sheet. Yeah, good luck, Mildred. That's great. I mean, the best way to learn about trading is to trade. I would read the Market Wizards books. And Trading to Win is a really good book. You'll like that one. That's maybe the best trading book ever written. Yeah, I mean, trading it's not easy. It's like saying playing chess is going to make you better at playing chess. It's going to make you a little better, but you know, uh, find somebody that knows something about trading and ask them for some advice too, which I suppose is what you're doing.
Order partially filled. Order filled. Order partially filled.
Righetti.
Order filled. Order filled.
Ari Kiev, Kiev. Yeah, Yahoo Finance is going to zero, which we're very happy about. But yeah, so in the absence of doing more work, I kind of like it.
Order partially filled.
Again, got to do more homework on it. But first look, quick look. Zscaler looks cheap to me. Still gotta work on it much harder to understand it, but